Sense you want to say something else.
This long memory that people have
Yes.
on price levels. I mean, do you feel like you, the president's economic team, the president himself, could have done anything differently over the last few years to better address that, better, sort of meet people where they are? I mean, you've known that that is where people's heads have been at for a while.
The question of could you have done something different and better, I always feel like, sure, you could always, nobody's perfect, and you can always improve on what you did. But on the issues I'm talking to you about, we were one of the first folks to be talking about this, to be understanding the difference between inflation and price levels from people's perspective. I mean, I don't know if you remember, but I brought this to our senior staff one day. I brought this, well, I think it might have been the only time I did this. I brought a handout to our senior staff and said, let me talk to you about the difference between inflation and the price level and how people feel about that. And, economics doesn't think that much about the price level. It thinks a lot about inflation. And, not at all a critique of the mandate of the Fed. That's the congressional mandate and the one they follow. But it's full employment and stable inflation. So, and you'll hear Chair Powell talk about that I recognize the price level is a stress to people, but my job is to get inflation down. So it's something we've been on for a long time, and it's behind the cost-cutting work that we tried to do here. We cut costs in healthcare. The president talked today about junk fees. You saw the energy results from the SPRO release and so on. We tried to get a lot more competition going in the grocery sector, where there's definitely not enough competition, leading to pretty high markups and profit levels that we've talked about and used the bully pulpit to convey our concern about. But, we live in a capitalist economy, and so prices are generally determined by private markets. But where we could, and healthcare is a great example because the government is in 9% of the healthcare market. So healthcare is about 18% of GDP, about half of that is the government. So there's an area where we could and did make a huge difference. Insulin, capping prescription drugs, which kicks in, by the way, in a couple of weeks, the $2,000 cap on prescription drugs. We're very proud of that agenda. Could we have done more or talked about it differently? I think we did what we could.
Hey, Jared.
Hey.
Good to see you. One of the things the president mentioned today at Brookings was he hit a note of regret about not signing the COVID checks the way that Donald Trump did. And I just was wondering if that's something you ever talked about, or following up on MJ's question about what could have been done differently. Was that a debate that happened at all? Would you have recommended anything to the president in that regard?
It's not something I recall talking or debating about. I mean, I will say two things about that. One is, just to bring it back to the economic space in which I'm more comfortable, certainly those checks were instrumental in what I described earlier, which was getting businesses and consumers to the other side of the crisis. We gave people more buying power than they had at a time, and there's been a lot of second guessing on this, so I'd love to set the record kind of straight. In January of 2021, it was peak COVID deaths. Okay, the unemployment rate was stuck at 6.7%, and I just looked back the other day. The last jobs report when we came in was a negative. It has been revised. It's been revised differently. I think it's actually been revised to be a bigger negative, but it was a negative. In other words, we'd lost, I think, 140,000 jobs according to the print. That was in December of 20. So this was a very challenging economy. People who say it was fine and you shouldn't have done anything are forgetting. That's amnesia. So we're very proud of the fact that this income got into people's hands quickly. Who was asking about the lag a second ago? Boy, there's a really tight lag there. This money got out quickly. It got into the economy quickly, and it very quickly set up an economic expansion that is today the envy of the world. The president isn't hyperbolic when he says that, and I say that having recently come back from Europe, is the end that set up that full employment expansion that we've enjoyed since then. And two, so I said there'd be 2 points. Two, he was kidding.
Oh, yeah, he was kidding about signing the checks.
He was kidding.
Oh, good, Daniel.
Thanks, Joe. I just wondered if you have had the chance yet to speak to your successor in the Trump administration, and if you've got any advice for him.
I have not. I don't know who will be sitting in my chair yet, so I haven't spoken to that person. And then advice? Yeah. That's a good question, one I haven't thought of. I would say read the president's speech today. Really, I'm not being facetious. The president's speech today is the best advice I could give to any member of the incoming economic team. Because what it says is we have planted some very important seeds in growing domestic industry, which I think both the outgoing and the incoming administration share the strong desire to see American industry stand up independently, more resilient supply chains. Yes, we still believe in very robust trade flows, so obviously part of my advice would be not to do sweeping tariffs. Certainly small tariffs, targeted tariffs that protect against unfair dumping, sure. But it would be to nurture, I guess this may not be the most mellifluous advice that they want to hear, but nurture the seeds that we've planted. This is not a blue state thing or a red state thing. And in fact, the president was very clear on this today. Most of the investments under the IRA, under CHIPS, even under infrastructure, are going to red states, not blue states. Most of them are going to people with relatively lower incomes or lower levels of education. So very much a working class issue. So nurture the seeds, don't stomp on them.
Is there anything that you have seen or heard from the incoming administration's economic plans that you like? Or that could be in line with what you have?
I've heard certainly commentary about getting on a more fiscally sustainable path. So thinking about Josh's question a moment ago. What I can't put together is how you get there from here, well, not from here, how you get there from what I believe to be their fiscal agenda. And in fact, there have been many scorekeepers across town who have been scoring the cost of not just extending fully the TCJA tax cuts, but going further. Tax cuts for overtime, tax cuts for Social Security, tax cuts for tips. And so if you tout that all up by one study, there was an upper bound of north of 10 trillion in terms of adding to the deficit and the debt. So I like some of the sound I'm hearing about getting on a more sustainable fiscal path, but then I'm hearing a policy agenda that goes the wrong way on that.
Just to follow up, you said that most of these projects are in red states. Certainly your administration didn't get a whole lot of political benefit from that, but I'm wondering, why is that? Is it because it's easier, there's less red tape, there's less regulations in red states, you can get projects up and going faster than in blue states?
It's not so much that. It's more that that these projects were targeted to communities that had been historically left behind. This president believes, and I think he probably shares this belief with the incoming president to some extent. This president believes that while there are absolutely positive attributes to globalization, the idea that globalization didn't leave behind American communities and didn't hurt anybody and uplifted everybody is clearly wrong and even bereft. I mean, to blithely say, here's another trade deal, everybody's going to love it and be fine, is just denying the impact of the China shock and the hollowing out that happened to the very communities we're talking about. So these plans were designed in part to disproportionately send their investments to communities that had been hollowed out and left behind. Energy communities, communities where anchor factories were lost, and that's behind where those investments have flowed.
But a lot of battleground states were deindustrialized and left behind.
Well,
put projects in there. Why red states is what I'm asking.
No, go to investment.gov and you'll see that there are lots of projects there too. So it's not that 90% were in red and 10 were in blue. I don't know what the division is, but I think it's probably fairly close. It's that a lot more were, when the president talked about this today, he framed it as like this may not, some may look at this and say this is not my greatest political move. That's not where he's coming from. When he said, I'm president for all Americans, he meant it and he over-delivered.
Yeah. Hey, Jared, thanks for doing this. I have a question sort of about legacy. Biden billed the speech this afternoon as about an economic playbook, something that is successful and should be replicated. But it didn't have a lot of electoral success, and it didn't, in the minds of voters, as other folks have said, they don't see it as a success for them. I just wonder what gives you or what gives the president confidence that this should be or would be replicated.
So here
in
you
the
have
future?
to, it's a totally fair question. Here you really have to get under the hood, and I've done this. If you ask people what they think about paying $35 for insulin versus $400 a month, it's not going to surprise you that that polls somewhere between 80 and 150%. I'm making the second number up, but it polls north of 80%. If you ask people how they feel about an infrastructure project that restored a bridge in their area, again, you'll get approval numbers in the high 70s and high 80s. If you ask people, and now I'm talking about Democrats and Republicans, how you feel about this new computer fab that's going, microprocessor chip fab that's going up in your town, in your area, that's going to provide thousands of jobs building these fabs, which are 3-foot football fields long, and lots of jobs staffing them, jobs that the president today said can pay up to $100,000 for a non-college educated person. Not only are they going to say, yes, we like that, but a number of Republicans, I think a double-digit number of Republicans, have sent notes to the incoming administration saying, don't repeal that stuff. So part one, get under the hood and look at how people feel about many of the actions that the president talked about today. Part two, which I'm not denying the premise of your question at all, it gets back to inflation. And I probably haven't said enough about that today. I talked to MJ and others about the difference between the price level and how, if you remember what things cost, that really sticks in the craw of many in the electorate, not just here, but globally. This inflation was a global inflation, so let's not forget that. In fact, cumulatively, we have good scatter plots on this in our forthcoming economic report of the president. This inflation cumulatively was about the same in the U.S. as it was in Europe and G7 countries. Where we stand out from the pack is not in cumulative inflation, it's in growth, it's in productivity, it's in innovation, it's in job creation. And so that's an important part of the puzzle too.
Thank you for being here, Jared. I just want to ask you, a lot of this has been sort of reactive to the new administration that's coming in. The president-elect posted in the course of the last hour, as we've been gathering, that any company or person investing $1 billion or more into the country will receive fully expedited approvals and permits, including environmental approvals. Is there any consequence to something like that? Maybe this is a question that's more about the environment more broadly, but economically, is there any reason why this should be something that's reconsidered or gets tough scrutiny?
I would hesitate to respond to a tweet from the incoming president just because I'd like to know more about what he's talking about and whether that's something they're actually planning or something.
Fair, that's all we know about what he's talking about.
Right.
That's fair.
So I probably wouldn't say much about that. I will say the following that speaks to that a little bit. I keep flacking our forthcoming book. So in the economic report of the president, out in a few weeks, one of the chapters in that, it's not like we make any money. It's just point and click. So it's this is just intellectual sharing. We've had tremendous foreign direct investment, and yes, we've definitely tried to make clean the brush out. So there's to help diminish the burden from permitting and things like that. And there's more to do in that space. And I think there are members of Congress. That is, I believe, a bipartisan issue that we could be working on. So if the Trump team is serious about trying to clear some of that brush, sure. But one thing I hear too often from him and them is, without regard for any impacts of some of the guardrails that are there for a reason. So that's why you shouldn't really just respond to a tweet. You need to look at what's the impact of taking down guardrails that are embedded in that tweet, but not realized, not recognized. But without, even with the current situation being as it is, we've had tremendous inflows of foreign direct investment. I mean, TSMC, as you well know, I suspect, is building plants and already testing chips, and I think quite successfully, in their fabrication plants in Arizona, I believe, and of course across the country. We've seen these investments play out. And when I think about the pictures in this chapter, the foreign direct investment charts, like they spike up like that. We've certainly seen historical investments in manufacturing facilities in this country. We recently hit a peak in in the contribution of manufacturing facilities in this country. Its contribution to GDP was recently the highest it's been since the early 1980s. So that's not just domestic investment, that's global investment. We're very proud of it.
All right. Go ahead, Jared. Last question.
Thank you. So, I mean, I guess more broadly, the audience for the address today, was it, like you said, just for the American people to know sort of what you were and kind of how to judge the next 4 years, or is this kind of a call to action for members of Congress, for Democrats to think before maybe they go along with some of these policies legislatively?
I mean, I think that in some ways, sure, the latter of what you said, in the sense that the president was very clearly outlining two very alternative economic playbooks, and he was very critical of the former, the trickle-down model, and very much underscoring the progress that we've made with the Invest in America, Invest in Workers, invest in unions, invest in tax fairness, invest in domestic industries in this country. That's the agenda, that he obviously argued today is far superior to growing the economy in a lasting way, to trickle-down tax cuts for rich people, which, as I said earlier, simply worsen the fiscal outlook and enrich their beneficiaries. What I would say in terms of, I don't know that there was some sort of, no hidden message to politicians in there, but I've tried to say today, one, I think, useful way of looking at what he talked about today is this investment agenda. Strong consumer spending at 70% of our economy, that's important, but investment, is another 10, 15%, and that's important too. Consumer spending helped us get to where we are, helped us, strong consumers on the backs of a strong labor market, easing inflation, strong real wage and income gains, that's helped get us to where we are. And in fact, a healthy American consumer, off the backs of a strong full employment job market, will always propel this economy forward, because consumer spending is 70% of our GDP. In Europe, it's 55%. In China, it's 40%. So that's a natural place for us to have gone. But for investing in the future, you got to plant seeds. So the message to anyone, D, R, whomever, from the speech today, is nurture those seeds. Take those seeds that we've planted, and by the way, these are not sprouts in the ground. I mean, these are seeds that have $1 trillion of private capital backing them. So they're sprouting. I think I better put this tortured metaphor aside pretty soon. But those sprouts need to be nurtured, and I don't care if you have a D or an R next to your name. You need to roll up your sleeves and start nurturing.
Nurturing. All right. Thank you so much, Chair. Appreciate it. We'll be nurturing
I'll bet you
those
will.
seeds. All good? All right. Thank you so much, Jared. Appreciate it.
We'll take signed copies.
That's right. All right, just have two more things to share with all of you at the top, and then we'll continue. So today, following the G7's June agreement and the President's October commitment, the United States has dispersed $20 billion to a new World Bank fund that will provide economic support for Ukraine. The U.S. and G7 loans will be paid back by the interest earned from Russia's immobilized sovereign assets, increasingly putting the cost of the war on Russia, not on U.S. taxpayers. After Russia's brutal invasion of Ukraine, the G7 made a commitment that Russian sovereign assets in our jurisdictions will remain immobilized until Russia ends its aggression and pays for the damages it has caused Ukraine. The United States and G7 are now making good on that commitment. Together, we will leverage income earned from frozen Russian sovereign assets to provide a total of $50 billion of extraordinary revenue acceleration ERA loans to Ukraine. This will lend vital support to the people of Ukraine as they defend their country, and it also makes clear aggressors and tyrants will be responsible for the damage they cause. And finally, tomorrow, the President and the First Lady will host the first ever White House Conference on Women's Health Research. The conference will bring together business philanthropic leaders, academic researchers, advocates, investors, and administration officials to discuss